really
hit the record button real quick, brother. You can show your
this is
screen.
gonna be a charting party.
Oh wow.
Charting party. So y'all let me know what y'all want to see, and then we're just gonna go from there.
Yeah, you just
Hey.
pick the stocks.
Nah, I want to look at. Hey, let me see what McDonald's look like. That's supposed to be one of the dividend picks.
Oh really? What's the dividend
Yeah.
yield on it?
I don't know. I haven't even looked at any of that shit.
If you go to Trade Station, they have a whole calendar of different companies and what day they actually pay out. And then
Gotcha.
I believe it also says how much it pays out per share.
Could be.
So it's definitely worth checking out.
I'm gonna look
Hey, can
up
y'all hear my AC?
CNBC is good as well.
Nah,
Can
we
y'all hear?
can't.
Okay, bet. I just want to make sure.
All right, we're looking at things from a day perspective. McDonald's looks up right now. It's above the 21 day. It's not too extended. But if we're going to chart this up, does anybody see any patterns that they immediately recognize? So what we're going to do is start from this current price. Let me know if I need to get larger.
And it has a dividend yield of 2.04, Brandon. I mean 2.4, my bad.
2.0. Oh,
2.4. And pays dividends out on the what pays
You
them out
got three
May.
white soldiers right there.
Is it is that like biannual, quarterly? How do they pay the dividend? Does it say
It looks
how many times a
biannual,
year?
bro.
Twice a year.
Yeah, it looks.
Yeah, that was
well,
one
it
of
looks,
Ian's picks.
Oh no, it only shows once. It says, let me see, I have to look it up. It shows the next one is May of 2020, which was already passed already. So it looks like it's 1 year, one time
It
a year.
sounds like it might be quarterly.
Yeah.
May is a quarter. So if we go to current price right here and we backtrack to the left and down, we're going to see this area right here, right above the 21 day. So typically you have your proximal and your distal line. Your proximal line goes above on the body of the candle that is when the price started to move sideways. So if you look here, price was going up, it came down, it moved sideways, and then it continued up, right? Everybody see that?
Yeah.
Price went down, it went sideways, and it went back up.
All right, so explain this to me a little bit because I'm starting to dive a little bit deeper. Because I started getting into Forex, it's kind of like the same thing, almost similar like far as the charts. So in between the, I'm just going to say blue line and this orange line, right?
Yeah.
So would you say that's, what were they at that price? Like, what were they?
What do you mean, what were they? Like what?
Like, would that be a good entry point if you were trying to invest?
Forex works a little bit differently, but with stocks, essentially, yes. We all know that these two lines right here are the exponential moving averages. The blue line specifically is the 8-day. So it's going to give you an average range of how the market is moving on an 8-day spectrum, right? So this line is going to average out what price would be every 8 days. In the same manner, it will be the exact same for the 21-day. The 21-day would tell you, on average, this is what price is moving or where price is moving every 21 days. As far as stocks go, because we know that we're in a pandemic and things are in the recovery stage, these exponential moving averages are great tools to indicate how price is pulling back and giving you an opportunity to buy. For instance, you notice that price came down, touched this 21-day, and continue to go forward, right? In that same manner, you see that we have this buyer zone. This buyer zone was created on the 21-day moving average. So this is a better indication to say, hey, this is a good time to buy this stock because it is at a discount. Normally, the price is going to continue to rise up, but when it pulls back on that 21-day, it's giving you that opportunity of buy, right?
Hey, can I piggyback on that, Duck, to answer Tyler's question? So Tyler, the market is kind of a language, right? So you want to know how the candlesticks are moving. So there's an app called JCP. I don't know if you have it or not, but that app recognizes patterns with the candlesticks. So right before where the exponential average goes into that buy zone, you look to 1, 2, 3, 4, 5, 6 candles to the left. You see right there, that long, those 3 ones, that's called the 3 white soldiers. So it indicates how that the 2 candles after the first one, before that long candle, indicates that the market is in a strong buy. You have 2 flat bottoms on those 2 previous candles.
Got you.
So if you go through that app, it'll just teach you, and it has quizzes and stuff, but you'll start to recognize the candles. So before that buy zone came back, you already knew that it was going to go into a buy because you understood what the candle was saying. That's all I got.
Right.
Yeah, app again.
JCP, Japanese candlestick.
JCP.
Yeah.
I appreciate that advice, bro.
No problem.
Awesome. Move this out the way. Bam. All right, and we're back at it. So I'll put this here just for anybody they want to see about. So an app that can help you for an app that candle readings and patterns, you can use JCP. So we're gonna put a line on the proximal line, and we're gonna put it at the end of the wick. Right. This is your buyer zone. Coincidentally, it's right at your 21-day moving average. So this is essentially a good price. Now, how we kind of use this is we use this zone. So when candles are being created in these days, we're going to wait for price to come back and revisit it. And price revisited it one time, and it did not come back. So McDonald's might be on a really good buy. It might have been really good news that came out, or McDonald's might be doing something innovative. I don't know. But essentially, around this 21-day moving average, it was a great price. Any other stocks you want to look at?
Let's look at the Tesla. Tesla almost hit 2,000 today.
Tesla has been
bro.
It's been very, very
Sheesh.
bullish. If we look at it from March, it was $358. It has been bullish ever since. It's been riding that 21-day and that 8-day specifically, but it'll come back at a very good price every now and then at the 21-day. So essentially, whenever you see a pullback at the 21-day with Tesla, you know that it's going right back up, right? So we see Tesla been pretty bullish, and last week was a pretty good buy. We saw that it came down. It went past that 21-day moving average, and then that next day after they announced the stock split, it just jumped back up and created a new record high, which is awesome. How we identified that buyer zone was trash this. Okay. This was everybody thought that, well, including me, I thought that Tesla was going to come back down to this 1,200 range. So when it started to go on this sell, I thought this was going to be the perfect opportunity to buy as much Tesla as you can at 12, 23, 74, and never look back, right? But Tesla did not do that. Tesla came to look back to the left. We saw this zone that Tesla came back to test. At 1422, and we saw that wick at 1367. Coincidentally, Tesla tested all the way down to that distal line, right? It wicked, it did not pass it, and it continued to go up. This was a great indication that this was a really, really strong buyer zone. And Tesla did not break this. This is a great opportunity to buy. All last week, I believe Jay kept saying, Tesla's at a buy, Tesla's at a buy. Get it now. It's almost like 30% off of the entire high that it had because it came down to this buyer zone, giving everyone an opportunity to buy, and it went exactly back in the direction that it wanted. Now, one thing that I have been looking at whenever I do my charts is I look at this zone, and then I try to look further to the left to where did it originate from, right? Like what made price specifically come back down to this zone? Was there any other repeats on how this price was determined? And if we look further to the left, we see that this zone right here, right? You have 3 candles that are just moving sideways. How I see it is your proximal and your distal line could definitely be on the top of these bodies of candles and at the bottom of these wicks. So all of this whole zone, in my eyes, how I read the charts, this whole zone was created based off of these candles that are moving sideways. So before Tesla was even going to go or even think about going to 223, it was going to have to break the threshold of these side moving candles. These are your bases. This is a chair formation, but this is your base. You put your proximal line at the top of these candles because they're all moving sideways. You don't see price going up, but you also don't see it going down. So I'm going to put my proximal line on top of all of these candles and at the bottom of the wick. What did price do? It came down, it touched, it went back up. So it was a strong buyer zone. Then it came back down, put a whole candle in. Now we have a lingering candle. Like now you're telling me I have to watch how the price runs. But since the rating on this is, the odd enhancers will tell you that this is still a pretty good buy. It's only been revisited once. It did linger, but it's a chair formation, and it continued to go up, bro. Like as soon as the news came out for the 5-1 split, everybody knew about it. So everybody got the FOMO. FOMO is the fear of missing out.
Load the boat.
Load it up, man. Load it up.
Load the boat. At
So
that
if
point,
you did
any
not
investor
buy
said,
here, if you did not buy here, please do not chase this. Please do not
that's
chase
crazy.
this. Because at this point, Tesla is now at the highest point that it's ever been. So if you buy right here, and this week, it just happens to come back down to this buyer zone. This is a buyer zone. If you buy up here this week, and it comes back down to this zone, you can't get mad. You might as well just wait for your opportunity to buy when the charts tell you. Where does the chart tell you here? It's giving a clear indication at 1664 that price might, it's not, you know, promise, but it might come back to the zone. Now, the big thing about it is you need to watch your EMAs. You see that price went straight vertical today. So it's going to have to flatten out. And as it flattens out, these EMAs are going to catch back up with it, and you'll see where the 21-day is, where is your best buy, or you'll see how the 8-day will then rise with, you know, pulling price up along with it.
Quick question.
What's up?
So I've been buying fractional shares because I'm waiting for the stock split. Is that a good idea, or should I just
Hey, I'm gonna be honest with you. Definitely wait till the stock split now.
Yeah, wait for the stock split.
Like David just said, it's at its highs. Could it go to 2,000? Yes. If it goes to 2,000, it is the best short ever. I don't care if they do split the stock. Like I would tell everybody in the chat to short Tesla stock and make some money off of it. It's a little extended right now already. So just because something's extended don't mean you short it automatically, but you don't buy here. You just have to stick to your rules and stick to your discipline. When their Twitter is already talking about it and everybody's talking about it, you already late. We were talking about Tesla last week at 1,400, and we were telling, hey, it's around the 21-day moving average. It's in this little wedge pattern. You see, if you go back down, you see all that little consolidation in the middle there, close to that zone.
Mm-hmm.
That's when we were saying, hey, this is a good buy. And we had to wait a little bit, and it kept dropping, but then it turned around, and then it shot up. But now you can't. The risk to reward is not in your favor. Like
Absolutely not. Jay, I believe you did this, right? How'd you do this? You called it a wedge?
Yeah, a wedge, a little wedge.
Something like this.
I still have I think I still have it up if I share my screen, but I'll let you share yours for a little while longer. But definitely the reward to risk is not necessarily there right now for Tesla, in my opinion. If we're looking at stocks to buy, I still think that TDOC is a great stock to buy, and I still think DocuSign is a great stock to buy here. Stuff like Fastly, you know, stuff that has been beaten down in the last couple of days and that can rebound.
Right. I went and got another TQQ and AMD.
TQQ, I don't really worry about the price. Well, I do, but I'm saying if you want to buy it every month, you just buy it when you have money. Like
right. That's what I've been doing.
You kind of have to be disciplined with TQQ because it's always going to look high. Like it always looks high. That's what I've learned. So you kind of just have to buy. Like even if you can just get TQQ at the 8-day, it's a decent buy because you know it pulls back to the 21-day, but you see it's only pulled back 4 times in the last to the 21-day, like maybe four little clusters to the 21-day.
It'll pull back at least once a month. That's what it's looking like.
Yeah. But I'm saying just for me, it's more so I just have to be disciplined and buy it because like, you know, obviously you want to if every entry could be at the 21-day, you know, you'd be golden. But it's okay to buy at the 8-day sometimes, or it's okay to just buy the zones as well.
Right. Okay.
Y'all see my face?
Yeah.
Thanks, man.
I'm just ready for August 31st so I can load the boat. I'm putting everything inside of Tesla and Apple. Everything.
Yeah, dude.
So successful now. I got me a Tesla stock now.
Oh, you got one whole Tesla stock?
Man, you know, hey, check me out.
Come on, man.
I ain't
Join the
got
club.
that
Join the club.
I'm not there yet.
Yeah, I wish I would have got it in March, but it's all good.
Me too.
No, the crazy thing is, from when we were talking about Tesla, I'm already up like 22%.
Man,
Like, it was just fractional. Imagine, man, like that's really BS. like he need to chill out a little bit. Like,
Yeah, I know. I'm not too worried. Once that stock split, I'm gonna be a little 5-to-1.
dang,
Yeah, Ian gave us a notification on yesterday or so. Not to keep bringing him up, he was saying wait until the stock split for both of them.
Apple and Tesla are a little high right now to buy. For anyone who wants to buy it now, I mean, if you can't, you won't be wrong, but you might be wrong in the short term. Like they will go back up in price eventually, but don't be alarmed if they drop because you're trying to buy it so hard before the split. It doesn't matter.
Oh no, I'm not trying to buy it so hard. I'm just trying to put as much as I can before the split, so when it does split, I see how much more I got to go to at least own a share. You know what I mean?
For me personally, my investment strategy, my strategy, I wouldn't worry about that. I would just worry about, are you getting it at a good price? Because the stock market's not going anywhere. So you don't have to. The split is skewing people's mind. Oh, the split. I have to buy it before the split. You need to buy it when it's a good price.
Yeah.
But if you know you're not going to buy it later, then buy it now because just move with action. But if you know yourself and you know you can buy it, I know that I will buy it at a good price. But everybody's not like this. So if you know, all right, I got some money, I just need to put all it in Tesla right now, that's still a better decision than doing nothing.
Yeah. And before the split come, we will post a price that you should buy both of those stocks in for those long-term holds.
Yeah.
Definitely something I'm ready for.
Look at Boeing one more time, and then Jay, I'll let you have it. Chill out. So Boeing has been a beautiful journey for me. It's like if Boeing was an actual like currency, I feel like I would be killing it because at this point I'm literally following everything that is happening. So we saw Boeing come down from like $400.
Well, in March. Muted.
We saw Boeing come down from about 404 or 393 actually. It came down. It hit a low with 93, 97 bucks. It came back up about 33% or something like that. and it's been playing in these zones the entire time. I was actually on the earnings call for Boeing just because I just wanted to see what they were talking about. And that is what caused this drop from 187 down to, what price did we say? 154. It wicked inside of this trending line, which is crazy. It went up, it came to this buyer zone. This buyer zone happened to be, according to this trend line, it wicked, it left. It never came back. So if you would have bought this for a call or you would have bought the actual stock, you definitely would have made about 40, 30 bucks depending per share with that you're buying. For options, you would have did pretty well. It's good. So the next thing how I'm seeing Boeing is going to go is going to come back to this trend line. It has this buyer zone. And this buyer zone should definitely be, according to this trend, touch it, and it should go back up to this 185. I don't think that this zone is strong enough for it to break. Not just yet, not with the news that they had. They basically had a whole lot of cancellations with their orders. Everything that they were thinking that wasn't going to happen, a lot of airlines are still not purchasing their planes. They're having clearance issues. They have back stock. They're burning through their cash. Like, they have a lot of things to accomplish before we actually see a complete uptrend, a complete bullish market with Boeing. But the next thing that I do see coming from Boeing is coming back down to this buyer zone. It might wick, it might stay, but this buyer zone, according to this trend, and then I think it might revisit 185.
So once it falls back into that buyer's zone, should we buy? Okay.
Vote.
All right.
That's in my opinion. I think Boeing is a good company. Just for a long
I have one.
Wherever you buy in, I think in the long run, Boeing is definitely going to go back to its average. It's just one of those long-term holds that you definitely want to be in. Yeah, I kind of see it is Boeing is going to be, if Boeing is going to be down, I'm going to get it for the best price. So if Boeing breaks this trend line and it continues to go down, I don't know how far it'll go. There's a couple zones here, but as long as it stays according to this trend line, buy it up.
With Boeing, for me, I think you have to think in terms of, you have to think about the macroeconomic headlines. All right, so you have to start thinking about, all right, will we get a vaccine next year? And if we get a vaccine, will people feel more comfortable traveling? Because everybody's going to want to, by 2021, everybody's going to want to get back traveling. Like, the economic data for the airlines and everything is not looking good, but there's still a lot of fear in the market and everything like that. But they're projecting that there's going to be a vaccine at the end of this year or early next year. So once that happens, I think people will get a lot more comfortable. And you have to think more so like an institutional investor and say, all right, where could this go? And I think if you pull up all the way the chart back up, it can go back to 230 in 2 years. And if you buy the June 2022 options or something like that as a long-term position, around 170, 150, I think that you would be paid for your patience. Ultimately, I think it's still a $300 stock that's just, it's just due to COVID that it's getting killed right now. So I think you have to be kind of patient with it. It's not something you can look at every day.
Okay, I got a question about this COVID crisis, and just in general, like taking this one like with Boeing right now, like how far do you think it's going to continue to drop, and with the what's going on right now as far as COVID, like if there's no vaccine by 2021, or are people going to start to normalize things and then or start dismissing it? As we already see in some cases, people are dismissing it. Do you think by 2021 that that will still hinder it, not just Boeing, but in general with the stock market?
So for me, if you have to think of what happens if we stay shut down forever. So if you're saying we're still shut down in 2021. We're in a worse recession than we are in right now. And will the president let that happen? No. Do people want that to happen? No. You already see people are ignoring precautions and guidelines now. So what do you think they're going to be doing in 2021? I'm not missing 2 Christmases in a row. It's just going to have to become a new normal. Like, same with football and sports. So you have to think, all right, how long can the NFL and NBA and people not fly for? I say max another 6 months, and the stock is pricing it in right now. But you have to think, what's going to happen when they start pricing in? Oh, Boeing is a good company. We haven't even talked about their military defense contracts. With they have big. Boeing makes bank from the military, supplying missiles and planes and helicopters and aircrafts and stuff like that. So that's another segment of that business that people are not talking about. That segment of the business is strong because the military money didn't stop. So once they get the plane money coming back in, what could also happen is like how you see these surges in lumber prices, because people thought, oh, houses are going to be cheap and everything. Now people want houses and we have a shortage of supply that drives the demand up. We could see in 2021 a backlog of all this the demand for travel going to 2021, 2022, and then the airlines have to rush to buy those planes because they didn't have enough. I think something like that can happen. Like
that's what something I was looking at as well. Like, like as far as like flights and stuff are starting to pick up because people are starting to normalize it and be like, okay, it's okay. As long as I wear my mask, I'm okay. And a lot of people I see a lot of people, it's like half and half or 75-25. It's 75 people are still taking heavily on the precautions, staying in the house, and then 25% of people are starting to tiptoe outside the house and be like, oh, it's okay. And let me just normalize this, So that's something I just wanted to ask.
Yeah, it's gonna get like the flu. The flu happens every year. Hundreds of millions of people across the world get the flu, but it's so normalized that you don't even know about it really.
Right.
Look at it.
Not to get off topic, but that was pertaining to this, so I just wanted to know your feedback for
that. If y'all have other feedback, that's fine. With me, I think that you have to be patient with Boeing, but you'll be fine over the long term. It's not like my top buy, but it is like if I were looking to do a leap option, which a leap option is like a year or more with stock options. That's interesting to me. I'm basically just betting that the stock cannot even go to its highs, but just to a solid level of like 230, 234 by the time. That's from that sell zone up there. If you look at it on the chart,
Went up, came back down.
Yeah. So if I just said betting that it can go there, I think that it can in 2 years.
Gotcha.
Well, Jay, I'm gonna turn it over to you. I think we maybe have like 24 minutes left. If you want to break it down for the people, yeah, dig. This is that seller zone that he was saying, so price might come back up after touching this, breaking this seller zone, and then maybe revisit something up here. Probably stop here, touch here, something like that. But hopefully y'all learned something from. Oh, Jay, take it over.
Don't clown me for being on my phone, man. I'm sorry.
Oh.
Nah, it's cool, Jay. We really don't have to do the whole tutorials when we kind of like show on the screen. We can just have a general conversation about the market.
No, I actually want to show a couple of charts though.
That's cool.
I do have a suggestion. Do you mind going through after the charts, of course, going through a quick option and what it looks like whenever you're selecting those screens? So the dates, the calls, the puts, stuff like that.
Mm-hmm. So I can go over the option I'm in currently right now. So I'm in Visa, and you see, we talked about the zones. This is like another pattern that I use. You see all this up, down, up, down, up, down, up, down action. And so I'm looking for a range break out of this. So I'm looking, when you see all this consolidation in stock that's healthy, that means it's being accumulated or it's just kind of being stuck. And Visa is a good company, so it's just kind of moved sideways for from like May to July. So I'm basically expecting it to break out above this, and it's kind of started today and start to get to first target will be this 202 area, And then really, I expected to fill this gap all the way back to 208. So right here. That's just how I'm kind of approaching this option. And so I'll show you guys and I'm down on it today. I'll show you I was up on it today, but I'm saying I'm still down like what, 5%. So if we look, I would go to Visa, and I said I think it can touch 208. So I'm going to the options chain. I'm going to trade options. These are the options that expire Friday, so on the 21st of August. So like, for example, you have to pay $27 for Visa. You were expecting Visa to go up to at least 207.77. If it went past 207.77, you will make money. If it stayed below 207.27, you would lose all your money. So in this, you would most likely lose all your money because it has to go up so much in price in such a short time. So 4.18% for a stock in 1 week, especially Visa, is kind of fast. So what I did is I went to the September 18th calls, and I'm basically betting that Visa can go up 4%, or actually, let me see what my break even is. But well, it doesn't matter. I'm basically betting the Visa can go up 4% in about a month. I'll give myself about almost like fully a month now. Tomorrow's the 18th, right? That will make it a full month. That I'm giving myself for it to go up to 208. And I make money if it just goes to 202. Keep in mind, if it goes to 208, I'm looking at like a 150% return. So when you guys are looking at options, you need to think, all right, where's your target? So we just went over the targets on the chart a little bit, where our sell zones are, or our buy zones, or kind of how we're thinking about a stock, where we think it can go. So I said my target is first 202 and then next 208. And I showed you why on the chart. So you need to know the why on the chart, and you need to know a little bit about the company before you invest in it. Before you take a trade, I don't just trade random stuff that I don't know about. If I take a trade, most time I at least know a little bit about it. I can give you like a Cliff Notes summary of why I'm investing in the company, or why I'm even trading the company. So if we look at like the September 4th calls, if I needed to go to 208 or 207, it costs $166, and it was up 44% today. But you have to think my chances of this being successful, if I want to hold the stock over time, are going to be less than if I buy the September 18th call. So that's kind of how I pick my strikes. I have my targets from the chart, and so I said my target was 208. So I might make my break-even price on Robinhood 208. So I make money based on when it hits my target. Like my option is now in the money. In the money means that the on the option means like this would be an example of the in the money option here. So in the money would be this 140 call. So the stock price is 199.43, and the break-even price is 199.28, and it doesn't expire until September 18th. So that's why it costs $5,000, because you are already all the stock has to do for you to make money is stay above 199.28, and the current stock price is 199.43. So if it stays above that price, you are getting paid because the value of your option has value because it's worth something. So the value of the option is intrinsically worth 20 cents because it's 20 cents in the money. When you're buying out of the money call, if I'm going all the way up here, let's say I need Visa to go up 10%. The only value I have when I'm buying this option is the time, because it doesn't expire until September 18th. That's the only value I have. So if we go to January, these are more expensive because I have time value. So you're paying for the time value. You're either paying for time value with options, or you're paying for you're paying extra premium, which is how much premium is the price you pay. You're paying more for it because it is already above the price that you paid for it.
So,
go ahead.
since that what you did with AMD, so you bought that in the money price where you bought it above.
So AMD, let's look here.
Price was coming up.
AMD was trading at about 84. And I got in these August 21st puts. Now keep in mind, this was August the 7th I got in this. So I gave myself 3 weeks of time, and I got in the $90 put.
Mm-hmm.
And the $90 put would have made my break even around, at the time my break even was about 82ish, and I made my target, if we go to the chart on AMD, was, let me put it in perspective for you guys. So price came all the way up here to 87. I saw that it was extended. You can see this chart if you kind of go like this. When that line gets vertical like that, you know it's gonna fall because it can't stay like that forever. It's not healthy for a stock to just shoot straight up in a line like this. You see that line? That's what the price did. It went straight up in a line like that. You know it's gonna fall. So up here, I was shorting, and and the 8-day exponential moving average was here at $82. So I matched my break even up when I was searching for the puts. I wanted my break even to be at about $82, and I wanted to give myself 3 weeks of time for it to hit $82 because the stock was hot. I knew I was shorting it, but I didn't know when it was going to fall. I just knew the probability were greater that it fall in the next few weeks than it was that it rose. So I bought this put up here. So I said, all right, I'm on the 28th now. I was on the 21st. I bought this put here to say, all right, I think it's going to fall, 3% in the next week or so. And it did. You have to set your expectations with your stock. So like if I'm buying calls here with AMD, if I just say, all right, AMD is going to go up to 87 this week. Well, you see how it only costs $38 because the likelihood of it going to 87 this week is slim. Maybe I get a 2% move if the stock is really going, but I'm not giving myself any time. So most of the time when you lose on options trade, you're being too quick. You need to give yourself more time. And sometimes the price you pay is the value you get. So if I'm only paying $38 for something, why would you expect anything that's $30 to double your money or make you 20-30% of your money? All right, if you go to September 25th or something like that and you say, all right, I think AMD is going to go to $87 and you pay $500 for it, I mean, you have a way greater chance of it hitting your price by that time frame. So that's how I think about my positions when I'm going into option. I think about, all right, where's my target, and I think about how quickly do I think the target's going to get there. And because weekly options, they don't have the benefit of time. So you're really kind of gambling when you're in here, when you're just doing a week or a 2 week option, unless you know, all right, price is about to move and it's about to move quickly. So I've kind of stopped doing these because I know it's all right. When I do 1 week, 2 week option, even if I'm right, sometimes I'm not right enough. Like I'll be right, like price went up, but it didn't go up enough to hit that target that I had for it. I needed like another week or two for it to hit my true target. So that's a gem for you. Like look further out on your options trade. Any questions with that? It makes sense.
So when you have an option and you buy the 500, like if it's $500 and you don't hit your goal, you just lose the whole 500.
You would, yes.
Okay, just trying to make
but keep in mind, like you can always get out before. So let's say you bought the contract for 500. Let's say you bought the contract for 500. You make 10% on that 500, so that's $50. You happy with that 10%? You happy with that quick $50? Let's say you make that the same day. That's very possible to make 10% the same day on option. You sell it, you get out. You don't have to worry about the expiration no more. You're out of it, but you made 10% of your money. 10% of your money in a stock would take you probably about 2 months to make, on average. I would say a month or two to make that. Whereas you can make 10% a day. Hell, sometimes 10% is some people's yearly returns that they're happy with. So you getting that in a day is still a great win, and you don't have to spend that much money on options if $500 is a lot for you on an option. I'm telling you, from my experience and what I've done, you will be more successful if you give yourself time.
Mm-hmm.
Because like we're talking about Boeing, I don't know where Boeing's going to go in the next 2 weeks. It could either be 190 or it could be 150. I have no idea. I do know that Boeing's probably going to be 200 in 2022. I do
So
know
like
that. I can say that with confidence.
when you doing options trading and stuff, and you doing it short term too, like what's the difference on tax you gonna pay? Like if I'm making that 10%, then I'm gonna have to pay taxes. Is it still worth that 10% that I'm pulling, or should I just sit it in a contract for more than a year?
So if you set it in a contract for more than a year, you're not gonna have to. The taxes it is more tax advantage and it's less stressful. So that's one thing I'm learning. Like you don't want to have to, like, especially if you work. Like I'm not fully free where I don't have the luxury just to trade full time like I want to. So when you're working and you're trying to manage positions and look at it, you can't hardly think because your money on the line and you got to work and people talking to you. Like it's very taxing. But if you have a position that goes a year out, let's just say DocuSign, that's a gem for y'all. Like I love DocuSign. Let's just say I think DocuSign is gonna go to $250 by 2022 of January. If I buy the January 2022 calls, I'm giving myself a year and about 4 months or something like that, a year and a half, a year and 4 months right now for it to go to 250. I don't have to look at the option the same way every day. Even if it's down 10%, it doesn't expire until 2022. And I know DocuSign is most likely going to go up to that, close to that 250 level by then. So I don't have to stress about it every day. I don't have to check on it every 5 seconds. I can just chill and relax. And then that's where you can think about getting those 100 to 400%, even 800% return on your money. So you might have put up, 2 bands, but if you make 400% or 200% on that, you doubled your money, tripled your money in a year. And you can't do that most of the time through most conventional stocks. You might, if you're doing really good, you're going to get 30%. So to get 200 or 100% is, or even 800% or something like that, that's the benefit of options. But time is the most valued commodity in life, and it's the most valued commodity in stocks and in real estate too. The longer you can wait and the longer you can give yourself time to be right, the better.
Great. Any other questions from anybody? Any clarification questions?
Yeah, please, if it's not making sense, we're going to go over everything again in the future, but if it's not making sense, maybe I can make it click right now for you. Or Davey can make it click for you if he explains it a different way than I do.
Hey Jay, have you heard about any potential prices for Tesla? Like what it's gonna be if it goes to 2,000 or 1,000? I don't know, what would it be? 2,000? Would it be, since they were splitting it up? How much? What do you think the fucking price is gonna be once they split?
Like the day of the split,
Yeah.
and like
My first split, man. I don't know.
380.
To be honest, man, me personally, I almost want to short Tesla right now because it's like almost vertical, but you can't like just don't mess with it right now. Like I don't know. I don't know what Tesla's gonna do. I don't have a technical analysis kind of out the window because of the split. Like people are buying it because of the split. So my conventional methods are like, all right, this is overvalued. I can't really
zone. They can't hit a zone if it's at the high.
Yeah, I can't really say it's overvalued or undervalued. I can say you if it go to 200, if it go to 2,000, you shouldn't feel stupid for not buying it right here because it's kind of long in the tooth right now.
Yeah.
Now I had looked last week, and Duck had said he had bought it. And I think I was thinking about getting it that day. It was at 14. I was like, nah, I'm just gonna wait till the split because I was hoping that it'd be like around $300 a share or something. So I figured that I could get more bang for my buck after it split,
Right.
just to get more shares. But
If you
to
guys
see
want to
how
buy,
far
if you
it
guys,
shot up,
if everybody wants a buy point for Tesla, I mean, just buy it at the 21 day like we did the last time. Like
Yeah,
it'll come
it's
back.
gonna come back. It's
It'll come
just
back eventually. Like split or not, it's gonna come back down eventually. Some. So, that's what I'm gonna do. Like I buy it when I can get a good next price point at it.
yeah.
So when it splits, will it be worthless?
No, so like the thing about the split is what people don't understand is, all right. So if I give you $1 in cash, right, a flat dollar, is how much is it worth?
4 quarters.
How much is it worth in quarters? Yeah.
Yeah, 4 quarters.
So is there a difference in its value? It's just all right. I might be able to buy a snack with 50 cents that I can't buy with $1. I have to break the dollar up. So it's still worth the same thing. It's transformed. So if Tesla, because you think of companies with market cap. So Tesla is worth almost
300
million, something like that. 300, 400 million. So if it's worth 300 million right now, and then they split, it didn't go up to 500 million just because they split. You're still paying 300 million for the company. So when you buy a business, you're saying, all right, you have to think. A good way to think about it is like what I'm paying. I own this business outright. When you own shares, I own this business. I own a piece of this business, and this business is worth 300 million. Well, if Tesla goes all the way up to 2,000, it's worth, on paper, it's worth 400 million rather. Do you think it's worth 400 million right now? When it was just 300 million, you have to think about it like that. Like what changed in the company to make it go up that quickly? Did its fundamentals change? Are they coming out with some new product that's going to change the game, or did it just go up because everybody wanted to buy it? Because the people buying right now, you got to think who's selling to them, who's selling their shares. There's two sides to every transaction. Who's selling their shares to you? Because if James sell his shares, he got in at a good price in Tesla. If he sell his shares, he cashing out for a profit, and you're taking his money all the way up here. So he happy, and you holding his bag. That's what you doing. He had to come up, and you holding his bag while he go celebrate. He made great profit. You holding his bag, and then it drops down, and then you feel terrible because you bought at the top. So you have to. There's no difference in the value of Apple or Tesla as far as them splitting their stock. It just makes it more. It just makes the share price easier to buy for an everyday person. But that doesn't mean just because a stock could be worth $10 and be worth $1 trillion, its market cap, and a stock could be worth $300 and its market cap only be worth $10 billion. The $10 billion company you're still paying more for it in price, even though it's only $10 and one company's trading for $300. You have to look at this market cap when you're buying companies.
Okay. Thank
So
you.
you could be buying some fresh ass Nikes, but if they trade, if you know you can get some LeBrons for 200, and then somebody say, "Oh, we're gonna split this shit up. We're gonna release it 2 different times, and we're gonna charge $450 now." Like you're not getting better value. You gotta wait till you know it's only worth $200. If the shoe's worth 200, it's worth 200, and some sucker might pay 600 for it, but when it comes down to 200, they feel the pain of it. So you gotta think of like, what are you willing to pay for the company? I know from being in the stock market long enough, I'll get another chance to buy Tesla at a different price. And if I don't get to buy Tesla right now, I'll get to buy Amazon, or I'll get to buy one of the other stocks on my list that it's at a better price for me right now. And then I'll wait for Tesla to come to a price that I can buy it at.
Yeah, 1,800 feet.
Yeah. But we're gonna end here at 8:30. If y'all got any final questions, I can answer like one more, and then we'll go over stuff on our next Market Monday. I think we're gonna talk about Brandon. Did we get to talk about the Did y'all talk about IRAs or anything when I was gone? I think we're gonna talk about setting up IRAs, because also you guys mentioned taxes. Well, in your Roth IRA, you can trade options in your Roth IRA, and you can also just trade and swing trade stocks in your IRA. You don't have to worry about taxes. Once you put the money in there, as long as you don't take it out, it's tax free forever.
That's on the Roth, right?
Yeah, after 5 years, it has to be after you've had it in there for 5 years. You can the money's yours forever. So that's one of the main wealth building tools. Is just like, all right, if I have Apple in my IRA and I'm up 20%, not paying taxes on the gains I just made. So that's one of the biggest things, especially for your retirement. Like sometimes you just want to have fun and you just want, I bought some Teslas. Ain't nothing wrong with buying the S&P 500. Ain't nothing wrong with just being boring. You know, my retirement account is a lot less unsophisticated as my brokerage account. I just like to have fun because I like to trade stocks. I like to have fun. But with your retirement account, you can just buy Apple, Visa, and something like the S&P 500 and be done. You don't have to have 30 stocks. You can just have a couple.
So what you're saying, you don't only have to have what's that called? You don't only have to have pretty much what they offer in a Roth IRA. Like how do you get individual stocks? You just got to call your person.
So if you're talking, so we gonna talk about it next time because we getting close to our time. I'm gonna respect all y'all's time, but you have your basic 401k, and then you have your Roth IRA. Your 401k is through your employer, so your employer kind of gives you most of the time they give you choices. You can't really choose between like the stocks you want to buy. Like if you want to buy Amazon, just the stock in general in your 401k, most of the time you can't do that. It's only gonna be like mutual funds and ETFs. Your Roth IRA or your traditional IRA, you can fund that yourself, or you can manage your investments. So you could buy Bitcoin in there. You could buy Apple. You could buy Google. You could buy Visa, Amazon, Tesla, all that in there. The difference is how it's structured, because your employer is contributing to your 401k, and you can have Roth contributions on, but it's only going to be in like mutual funds, which is fine still. But if you want to like set up, all right, you want majority of your wealth in Apple or majority of your wealth in Amazon or Visa, then that's where a Roth IRA becomes very strategic.
Hey man, you out here dropping hot gems, bro. Who wasn't even getting
listen,
Straight nuggets.
Got me straight interested. Like, what?
Yeah. Y'all gonna have to tell them about the difference between 1099ers and W2ers. Better get them right.
Yeah. Well, hey, we're out of time officially, guys. It is 8:31. We appreciate y'all for getting on. Hopefully y'all grab those nuggets that we dropped out there, and y'all just stay active in the chat. We're definitely gonna be, dropping more information, looking at charts throughout the week. We're just gonna keep communicating, keep educating. I hope y'all are enjoying the content, really. So
I appreciate y'all for joining. I appreciate y'all for rocking with us. If you take the picks, you will be successful. Like, that's all I'm gonna say.
Yes, sir.
Appreciate y'all, boys.
Hey, Brandon, we got any last words? Beautiful. Silence is golden. Y'all brothers have a good night. We'll see y'all next March Monday.
Peace.
Later.